airline prices that have spiked 40, or used car prices that have spiked 45%, and airline prices that have spiked, 35 or 40%, and hotel rooms that have spiked like 40% or something like that. And so the speed, and here's the other piece. What's going to be interesting for me to see is whether prices come down. What he's talking about is the speed of the inflation being transitory, not inflation being transitory, even though they'll refer to it. And the problem that he sees is, and this is the piece that's my personal favorite, are inflation expectations, right? That would unanchor inflation expectations, and then people would go ahead and pull their purchases forward. And I'm sure they want them to do it on debt because the banks, their loan books have been going down. I mean, there's so many unintended consequences or intended consequences. I mean, I don't really know. This is why I say they're between a rock and a hard place, because the tool that they have to tame inflation is our interest rates. And also, I don't know, how about stopping or slowing down all of these asset purchases, mortgage-backed securities and treasuries? Can they raise interest rates? Can they stop those purchases? No. Once that genie's out of the bag, we saw them attempt to do it in 2016. And what happened in September 19th, or September of 2019, in the reverse repo market, then they had to go in. And that's really when they started the QE back again in earnest. It wasn't because of the pandemic. It started before that. And you now have disruption in the repo market again because of all of this liquidity. There is nothing they can really do because they've done so much already. They've been paying bonuses. McDonald's pays a bonus for somebody to come in, and they've been raising wages. But so on the one hand, it looks like a lot of people are better off. But when you take into account food inflation, rent inflation, I mean, all of the inflations that matter to the normal human being, their wages have actually declined by 1.7%. Even at a $15 an hour wage, which, frankly, is that a living wage? No, it's not a living wage. By design, the system, average wages never, ever, ever keep up with inflation. But now they're talking about, and once you give them that wage, which is one of the reasons why they created the fiat system to begin with, but once you give them that higher wage, you can't take that away either. Once you give something, you can't take it away. So, that is what they call sticky because it's going to be around. But does that really help the person that's making an average wage? Frankly, no, it doesn't. Prices are increasing on the goods and services that we do use. Food inflation globally is a huge issue, huge. And we see that in hyperinflation, where food becomes the single biggest issue for people. That's why I have my mantra that I've been really working on for so long: food, water, energy security, barterability, wealth preservation, community, and shelter. I mean, these are the things that we need all of the time to have a reasonable standard of living. They were not ready to crash the paper market yet. I was looking for an additional postponement, but hey, that's even better. So that's really what it's about, because a rising gold price is an indication of a failing currency. Can they postpone everything until 2023? Maybe, maybe not. I don't know. Because at some point, it is highly probable that they will lose control. And whether or not that is a choice is also questionable. because you never let a good crisis go to waste. And we have to feel a tremendous amount of pain in order to just, okay, save me, Mr. Bill, right? I'll accept whatever it is that you want to cram down my throat, but it won't work. It won't work by design, I believe. Well, it's really interesting because we saw the dollar go up because of the anticipation of in 2022 or 2023, the Fed raising the rates, and therefore that attracts more money in there. I expect the value, the purchasing power value, to continue to decline. It's declining more rapidly than I have ever seen it in my career. Okay, and that's because we're at the end. Now, the value of the dollar against other currencies is going to be dependent upon all of the manipulations inside of the foreign exchange currencies. But what really impacts you and me and everybody else that's listening to this and watching this is what you can buy with that currency. So that's what I anticipate. Of course, they're going to raise the debt ceiling. Frankly, I don't even know why they have it to bring it up as an issue every, this is now expiring at the end of 2 years. And the other part of that is that all of the new debt and the new money, rather, that was taken on by the Treasury or created and the Treasury's been holding, well, they have to get rid of about another $400 billion by August. And that means that's more cash that goes into the system, which is part of what's exacerbating, going back to the reverse repos, is exacerbating that problem, which they had to create in 2013 so they could attempt to it's all experimental, absorb the excess cash to stabilize those interest rates, on the Fed funds rates and the overnight rates that they pay. I mean, it is a house of cards, Patrick. It is a dangerous, dangerous house of cards. One misstep could topple that. There's a finite amount of this. That's it. This is just a 1 ounce silver round. And there's a finite amount of that. There's an unlimited amount of paper. I mean, $26 an ounce. Give me a break. I appreciate it because I could just keep buying it at severely undervalued levels. Thank you, central banks and banks and manipulators. And the Reddit trade is attempting another run at silver. But as the talking heads on CNBC said the other day, there's so much silver out there. Oh my God.